Hi, I'm Jeff Segelke, president of Segelke Financial Group and JRS Wealth Management, and I'm here to give you an economic and market update, first quarter 2026. Let's go. So there's a lot happening in the world right now. We've got the Iran war, we've got high oil and gas prices because of that war, and that is creating a lot of fear. I wouldn't say panic, but a lot of fear in people. Whenever you hear of wars and rumors of wars, of course it's fearful. Wars are terrible. People are dying, real people are fighting those wars, and there's a lot of bad things happening right now because of that. The biggest economic bad thing is the high oil and gas prices. And that is, of course, affecting all of us. That's affecting us at the gas pump when we go fill up our cars and trucks. That's going to affect us in travel. That's going to affect our food prices and different things because goods are moved around, in big trucks and things like that. So it's definitely going to affect things. What I'll say is, the war's been going on for about, 6 or 7 weeks now. It's April 17th. So the negative news is that we've got high oil and gas prices for the last 6 or 7 weeks, and it's probably going to stay for several more weeks. That's the negative. Those are the bad things that are happening right now, but I don't want you to be fearful. Although there's bad things happening in the world, there are good things happening in our country and in the world. And I want you to look for the good things. I mean this. I want you to look for the good in your family, in your homes, in your community, your neighborhood, in the country. There are a lot of good things happening right now. So we tend to, if we watch the news, we think only bad things are happening in the world. And that's not true. There are lots of good things happening. And I'm going to talk about a couple of those good things economically right now. So let's talk about that. We've talked about the negative. The negative is the Iran war and the high oil and gas prices. That's the negative. The positive things, let me go to some positive things that are happening. Let's talk about, I want to go real quick to, we're going to talk about, sorry, I'm moving around a lot. Good things. We're going to talk about assets. So, corporations, big corporations that make up the stock market. This chart is showing their debt at the bottom here in orange, going back to 1990. And you can see their debt is rising over time, meaning companies are taking on more debt. But look at their assets in blue. Their assets have gone up exponentially. So we're seeing that companies have much stronger balance sheets right now. That means they have more assets than they have debt. Companies, big companies, are doing great. They're doing great. We don't need to worry about them. They're making lots of money. And in fact, as far as profitability goes, look at this. These are pre-tax corporate profits going back to 1990. What we see is that the big companies that make up the stock market are making more in profits. That means they're making more money than they've ever made before the last 5 years. They're just exponentially seeing growth. And that's because of technology advances. AI is going to help them. So there's a lot of really positive things happening for corporations right now. And that's good for the stock market. The stock market long term is based on company revenues and company profits. Earnings per share is something that's talked about. All that means is how much money are they making? And if they're making money, the stock should go up over time. Short term, yeah, things like wars and bad news events and things like that can affect the market. But long term, the stock market goes up based on profitability. And companies are making so much money right now that it honestly is a wonderful thing. So I'm going to skip over this. I wanted to show you a couple things regarding the dollar. I have so many people who tell me they're concerned about the dollar losing value. And if we look at the dollar, this is the value of the dollar. Over the last year and a half, it has come down. So if we're looking at it shorter term or more recently, we're seeing that the dollar has lost strength versus other currencies in the world over the last year. So that's negative, right? It feels negative. But if we look back, now we're going back to 2020 and we see that really the dollar hasn't lost value. It's pretty much stayed the same if we look longer term. If we go back to 2020, it went down in value, up in value, down in value, but it stayed about the same since 2020. If we go even further back, now we're going back to 1997 here in this chart. And what we see is that the dollar has actually gone up in value from where it was back in 1997 to where it is today. The dollar has actually gone up in value. So as much as people are concerned about the value of the dollar, and I am too, long term, it really hasn't lost value in the last 20 years. So just be aware of that. Actually, that's going back 30 years, isn't it? 30 years. So the dollar hasn't lost much value. In fact, it's gone up in value over the last 30 years. So that's something good to see. Another good piece of news that I just wanted to show you real quick is I've got so much data, but too much to show you right now. I just want to show you a few things. Unemployment. Unemployment as of January 2026 was at about 4.3% according to the federal government. That is below the average where it's been since January of 2020, which it's averaged about 5.6%. So that's good news. Being somewhere in the 3 to 5% range as far as unemployment is normal. So that means we're in normal territory right now. We are watching it because of these companies doing some layoffs to see if is that going to be something that's going to continue and cause more unemployment. That could be bad long term, but right now things look good. So lots of good things happening. Last thing I want to show you, again, as far as wars and rumors of wars, we get scared. This is a chart showing the S&P 500 over the last 100 years. And all of these little blurbs here are wars. These are wars. So we've got World War I, World War II, Korea, Vietnam, Russia invading Ukraine. We've got all these different wars that have happened over the last, or are happening today, including the Iran war today. But guess what? The stock market still goes higher. So long term, investing is all about discipline and staying invested. Short term, it can be really scary, right? It can. And when we started dropping bombs on I was going to say Ukraine, on Iran 6 or 7 weeks ago, we did see the stock market go down about 5 to 10%. Now, I would have expected it to go down more than that with this huge increase in gas prices that we're seeing. Gas prices are 50, 60% higher than they were, maybe even a little bit more than that. And so we're seeing these high oil and gas prices. I would have expected markets to really pull back. They pulled back about 5 to 10%. And now, as of today, the market is not only back to even, it's actually positive from where it was when we started the war. So the market has recovered those losses in these 6 weeks and has actually gone up a little bit. So don't let the news make you fearful. There's so much, it feels like there's only bad happening in the world if we watch the news. But the truth is there's so much good going on. So again, look for it in your neighborhood, look for it in your community. There's good things happening. And as far as investing goes, there's lots of positive things happening right now despite this war and in spite of the high oil and gas prices. Our hope is that those oil and gas prices will start to go down as this war hopefully wraps up. And that would be great. We'll get back to normal and get back to growing the economy. If it lingers for too long, that is a concern. That is something we're watching, and we'll be making adjustments there. I always tell you this, don't watch the news. It tells you lots of bad information, doesn't give you good news. As I always tell you, and I always say, always make sure you have some safe money, right? If we have money in the market, long term it's going to do well, better than probably any other investment. But in the short term, it can be very scary. And so we've got to have some money that's safe, that's in no risk assets, that is not going to go down if markets go down. So as long as you're doing that and you have a plan, you're going to be okay. So don't be fearful. Be excited about the future. There's lots of good things happening, hopefully in your life and in the world. And I wish you all the best. And feel free to reach out to us if you have any personal questions or concerns. We're happy to help you, and we are here to provide confidence and help you to feel secure about your financial future. Take care and have a great day.